Imagine opening your trading app and seeing Plug Power moving sharply up in pre-market. Headlines scream, hydrogen boom, NASA deal, next clean energy giant. Your heart skips a beat. Is this the next big winner or a trap waiting to explode? Some investors are calling it a home run, while others are warning about potential risks. By the end of this first part, you'll start to understand why opinions are so divided. Hydrogen energy is no longer a futuristic concept. Governments worldwide are pouring billions into clean energy initiatives. Plug Power is at the forefront, providing fuel cells and green hydrogen solutions for both industrial and transportation sectors. This positions Plug Power as a potential market leader with a first-mover advantage. The company has secured contracts with major players, including Amazon, Walmart, and even NASA. These agreements validate the technology and provide recurring revenue streams. Analysts see these partnerships as proof that Plug Power is not just promising on paper, but actually delivering real-world solutions. Their fuel cells and electrolyzers are becoming more efficient, lowering costs and expanding capacity. Bulls argue that as hydrogen adoption accelerates, Plug Power could see exponential growth in revenue. Now, let's look at the bearish perspective. Despite revenue growth, Plug Power has yet to consistently generate net profits. High operating costs and heavy investment in expansion put pressure on margins. There is also point out that Plug trades at high multiples compared to traditional energy stocks. Any slowdown in hydrogen adoption or missed guidance could trigger sharp declines. Additionally, competition is heating up. Companies like Bloom Energy, Ballard Power, and emerging international players are aggressively entering the hydrogen space. Bears warn that this could erode Plug Power's market share and slow its growth trajectory. The debate isn't really about whether Plug Power is good or bad. It's about timing and risk tolerance. Bulls see the next clean energy giant and are willing to ride through volatility. Bears see a high-risk, speculative stock and focus on cash burn, margin risk, and price swings. Both perspectives are valid, but it all comes down to how comfortable you are with risk. Analyst opinions are divided. On the bullish side, Wainwright and Needham have price targets ranging from $20 to $30, citing hydrogen adoption trends and Plug Power's strong partnerships. They believe the company is positioned to benefit from a long-term clean energy boom. On the bearish side, some analysts caution that the company is over-leveraged, highly speculative, and may face downward pressure if subsidies, incentives, or contracts do not materialize as expected. This creates a natural tension in the market that makes the stock volatile, but also exciting for traders. So how should you approach this? First, understand your own risk tolerance. Are you a long-term growth investor, or are you trying to capitalize on short-term swings? Second, monitor catalysts carefully. Government incentives, major contracts, and technological advancements can trigger big moves in either direction. Third, always watch valuation and volatility. Plug Power can swing 10 to 15% in a single day, which is huge for a single stock. Many investors get caught up in the hype without fully understanding the risks. You need to consider both the upside and the downside. If you're bullish, it's because you believe in the long-term hydrogen economy. If you're bearish, it's because you recognize the company is still burning cash and operating in a highly speculative sector. It's also worth noting the psychological aspect. Stocks like Plug Power often create emotional responses. FOMO, excitement, fear, all of these can drive decision-making. Being aware of this is crucial to avoid making rash moves based on short-term price swings. Keep a level head and stick to your plan. Now, let's talk about market timing. Bulls argue that government support for hydrogen, combined with corporate adoption, will continue to accelerate. Bears argue that valuations are already high and the stock is priced for perfection. Both sides have valid points, which is why you often see wild swings in Plug stock. This is why timing your entry and exit points is just as important as understanding the fundamentals. If you've been following Plug Power, it's a good idea to weigh both sides carefully. Are you comfortable riding out volatility for potential long-term gains? Or do you prefer to wait for clearer signs of profitability and market stability? Drop your thoughts in the comments. It's always interesting to hear both perspectives from real investors. One more thing to remember, Plug Power is not just a stock. It's part of a bigger narrative, the clean energy revolution. Hydrogen may not dominate overnight, but governments, corporations, and consumers are increasingly looking for sustainable alternatives. This makes the debate around Plug Power relevant not just today, but for years to come. Finally, keep in mind that this video is for informational purposes only. Always do your own research before making any investment decisions. Stock trading is risky, and past performance does not guarantee future results. Imagine your favorite clean energy stock could double tomorrow or drop 30%. Plug Power sits right at the center of this debate. Are you ready to decide which side you're on? Whether you lean bullish or bearish, staying informed is the smartest move you can make in this high-stakes market.